So before we decide what will be the best option for us as a sole trader or a limited company and how much tax we are going to pay, we need to understand two things. Number one, what is meant by financial year, and number two, our personal tax-free allowance as well. So what is meant by financial year? Financial year start from 6th of April and it normally end next year on the 5th of April as well. Let me give you one example. Financial year 2021 started on the 6th of April 2021 and it's gonna end on the 5th of April 2022, and that's what we call it financial year. Now let's understand what is meant by personal tax-free allowance. So every year you will get a personal allowance. This year in financial year 2021, it is 12,570. What is mean by that? If you make less money than 12,570 pound, you will pay zero income tax. Now let's talk about the difference between being a sole trader or a limited company. So I'm gonna tell you the pros and cons for both of them, so you will be able to decide what will be the best option for you. And I'm also gonna give you some example so you will have a better understanding how the tax is going to work as a sole trader or as a limited company. Let's first talk about being a sole trader. Sole trader is normally very straightforward. As soon you get your UTR number from HMRC, unless you decide to open a limited company, you are ready. At the end of the financial year, HMRC will send you a letter asking you to do your tax returns. Let's talk about the pros and cons of being sole trader. The pro, which I mentioned, it's normally straightforward, easy to understand, it's not very complicated. And all the things like, for example, your name, your address, how much money you are making, everything will stay private. But there are cons of being sole trader as well. And the biggest con, in my opinion, is going to be the liabilities. Once you are a sole trader, you are the one who is running a business. So all the liabilities are going to be on you because everything is under your name, your personal name. Once you have a limited company, you are forming another identity. Limited company is considered as a separate entity. As a sole trader, all the liabilities are on you. So for example, if you borrow the money for your business and God forbid you can't afford to pay that money back, then the lender have a right to come after you and seize the personal assets to compensate their loss as well, which is the biggest con. So if you are comfortable with these things, like, that's entirely up to you. The other con which I have normally noticed, if you are looking to expand your business in the future, you are looking to hire the staff, then the things get a little bit complicated once you are a sole trader. Also, you want to future-proof yourself as well. I have noticed as a sole trader, it's little bit hard to get approval for the mortgage or apply for the car finance and all those kind of things as well, because the lenders, they normally prefer someone with a very established business, someone with a limited company who is probably paying themselves as a salary as a director in this limited company, which I will explain in a limited company how you can pay yourself as a director. They will normally prefer those people, and also someone who have a job, who is getting a consistent income and they're getting a salary and all those kind of stuff as well. So these are the things you have to consider and keep in your mind, because these are the cons, and as a pro it is very straightforward and easy to understand. Let's talk about how much tax you will have to pay as a sole trader. Just so you can have a better understanding, I'm gonna give you one example. Let's say in financial year 2021, your sales was £30,000. You take that sale at the end of the financial year. First, you will deduct all the expenses that you are allowed to deduct. The list for those, you can find them on the HMRC website. But if you are eBay or Amazon seller, normally it is going to be the fee for eBay and Amazon, the money that you spend on the fulfillment or on the postage, on the packing supplies, the money that you have spent on buying the stock, all those things are going to be the deductible expenses. You deduct those, and from that you deduct your personal allowance as well, because this is your tax-free personal allowance, which is 12,570. So from the 30,000 pound, you deduct the personal allowance, you deduct the expenses. Whatever the money will be left, you will pay 20% income tax on that and 9% national insurance contribution. This is the way it works if you are just self-employed. If you have a job as well, then you have to combine the income that you are making from your job and from the self-employment as well. So normally 20% income tax rate will be applied if you are making money in between 12,571 and 50,270 pound. You will have to pay 40% tax if you will make over 50,271 pound and between 150,000 in within a financial year. Normally people ask me, like, if I go over 50,271 pound, do I have to pay 40% on all of it? No. You will just pay 40% on the income which will go over 50,271 pound. Anything below that, that will be 20%. Again, I said if you have a job, you will have to combine both of them together. This is the way it will work if you are a sole trader. Let's talk about a limited company. Limited company, as I said, is considered as a separate entity. So all the liabilities are going to be on the limited company. You are just a director or a limited company. Limited company is considered as a separate entity. So limited company is also better option for someone who is looking to expand their business, hire the staff, run the payroll. In my opinion, limited company is a lot better option in the terms of sole trader, especially you don't have all the liabilities and stuff on you as well. Now let's talk about how the tax is going to work as a limited company. It's not a rocket science. The simple thing, limited company have a corporation tax. So again, you have your sales, and from the sales, you will deduct all the expenses, and whatever the money will be left, you will pay corporation tax on that. And I will put the current rate for the corporation tax on the screen right here as well. Once you are a director of a limited company, the money belongs to a limited company. So if you need to pay yourself, then you have a two option. Either you can pay yourself in the terms of monthly salary from the limited company as a director, or you can pay yourself in the terms of dividends. Let's talk about the VAT, because VAT is going to apply on the sole trader and it's going to apply on the limited company as well. Once your sales, I'm not talking about the profit, once your sales will go over 85,000 pound, you will have to register the VAT. And this 85,000 pound are not in one financial year, are in 12 rolling month. So in one rolling year, if your sale will cross 85,000 pound, you will have to register the VAT. It's not like you have to wait all 12 months just to see if my sale is crossing over 85,000 pound. Let's say in this month, your sale is 12,000 pound. You know that your sale is going to cross over 85,000 pound in 12 months. So you have to register the VAT as soon you realize you're gonna hit the VAT threshold.